Hi there, it's Bill with Smart Trades. About 11 o'clock on the West Coast on February the 9th, 2010. Anyway, taking a quick look at the S&P first. Did this chart just a little earlier, so it's a bit dated. And at any rate, we're looking for somewhat higher prices than a potential reversal in the S&P. Around 1082, 1083 basis the cash. That's a bit interesting because that was actually an important support level, about a week or two ago, and held the market up for a couple of quick bounces and then was taken out. So it's a pivot point of sorts, not the classic intraday pivots that you hear about the floor traders using, but nonetheless, to my way of thinking, a fairly important level. One of the things I'd bring your attention to here is that we've had some breadth divergences recently which haven't performed particularly well. Looking back to the end of December, you can see another example where breadth divergence actually produced a pretty good rally right off the bat, and here's one back in the beginning of December that also did. So it's a little bit of a sign here that maybe things have turned to the downside, so worth noting. Also, on a inverse note, so to speak, the decline is possibly counting out as a corrective ABC. That leaves the door open to possibly another round of new highs. Keep in mind our ideal target, the 1159 range, was never actually reached, and there's a gap up there basis the weekly and monthly charts in the 1159 or 1166 area basis the S&P cash. And if we get back up in there, we'll take another look, but for now we'll take this one step at a time. And again, actually the 1083 level, first juncture of importance, and we'll watch that carefully, because if we get a reversal from there, we may actually see a downside acceleration, which obviously would make the 1159 area moot. Some other scenarios, though, that may play out. Really pretty complicated juncture for the stock market. And here's another count of the S&P. This is basis the futures market, the S&P E-minis to be exact. And very difficult to count in here this corrective, what appears to be a corrective pattern off the late January lows. And it's irregular and C failed to take out the top of A, if indeed my count is correct. At any rate, it's kind of a mess. But that said, if this count is correct, we have a completed 5 waves down now, which would indicate that a larger scale correction could take place, and the 1100, perhaps 1120 area would be targets if indeed this count is correct. First, we've got to clear that 1083 on the cash, so watch it carefully. The reason this is different is that we did not make a new high at wave 2 here basis the futures, while we did on the cash. So anyway, we'll see how it plays out. Again, let's take it one step at a time. And quickly, here's a look at the Dow futures, which went right to the trend line and also a resistance target around the 10,100 area basis the Dow futures. Anyway, so far that area has held, so indeed we may be going down in the short term. I suspect that we've got one more test of that area, and the reason for that is, just going back quickly, that the breadth is very strong here, and usually the market doesn't just roll over on strong breadth ratios. Anyway, here's the gold chart, 480-minute version of the futures, and here's the quandary laid out fairly simply, in that the question is this entire decline in ABC, which would mean it's corrective and that new highs, perhaps up to our original 1250 target, are indeed coming, or is this a series of 1-2s to the downside? In which case we'll rally up, should fail perhaps below the 1150, 1160 area, and then accelerate to the downside. Anyway, time will tell. The important thing to do here is to watch how the pattern of this rally unfolds. And it looks like we're probably going to get some kind of correction, so let's watch it. And we'll see as it unfolds. Here's the dollar index, and again, just about an inverse of that gold chart. And here's that potential A, B, C rally. And a difficult count within the C wave, as we count it, possibly, in that wave 1 was extended, wave 3 is relatively short, but that, if indeed if it's correct, sets up for what should be a short fifth wave, which would target approximately the 8120 area, and that's also the A equals C area. So an interesting juncture if indeed we fail, and of course if we even rally back to make that new high. The dollar has come down a little bit after I did these charts. The alternate count again is that this is a series of 1-2s to the upside, and if that's the case, we should get a corrective decline, which should not take out this, or I think it's the 7670 area or so, basis the dollar index. And finally, let's take a quick look at crude oil. Now, crude oil tends to hint that maybe the top is indeed in the markets. Couple of things. We obviously have broken this trend line to the downside. This is an uptrend line that's held for some time. We've also taken out, or at least tested, a previous low here, so an argument can be made that the trend is now down. Moreover, that trend change, if indeed it has occurred, is being confirmed by higher volume on the downside. So, potentially crude has reversed, and if crude's a pretty good indicator of the general economy, so if it's rolled over, there's a good chance that that gold is rolling over and the stock market as well. So we'll watch it carefully. In situations like this where we have multiple scenarios unfolding, the key is to watch how the market reacts to key junctures, and so that's what we'll be doing and seeing how it unfolds. So stay tuned and have a great day. Bye.